What's up, everybody? Rob Gill, Epic, and today we're going to talk about how to use life insurance to create wealth. Is life insurance an asset or an expense? Whole life insurance is like a Swiss Army knife. No matter what age, no matter how you use it, if it's done properly, you could begin to create massive wealth. We're going to get into that in this video. The challenge with overall strategic placement of money really lies in the education of each and every product that's out there today, the advantages and disadvantages. So as a whole, we believe in proper planning by understanding how to position each and every dollar. For us at Epic, and for you, we believe the first place to put your money as the foundation begins to evolve is through cash value, high dividend paying life insurance. And that in that space is where the magic can really start to happen, provided you have a conservative long-term outlook. So I understand that that sounds real confusing, but I promise I'm going to keep it real simple. When we talk about the magic of life insurance, here's what we're talking about. You have money that comes in every month, right? And then every month your money goes out, whether it's to your car payment, to your rent, to your home, to your credit card, to your student loans. It goes somewhere. Somewhere between when you receive it and where it goes, and it could even go to a 401k. The point is somewhere in the middle, once you begin to own your own money instead of paying everybody else and begin to run it through a cash value life insurance plan, each and every dollar that you put through that program will give you not only a guaranteed rate of return in writing by state law and by contract, but here's the magic. While it's growing inside the policy, it has a savings component, you could then leverage it out to alternative investments and other opportunities. And like everything in life, there's a formula to everything, whether you realize it or not, or whether you're doing it or not. And the formula for success here is paying yourself first anywhere between 15 or 20% of every single dollar that comes through your world, and putting that through a savings account strategy, an ownership strategy. And once you begin to pay yourself first, and let's say you did it through the cash value life insurance plan, you're going to pick up that rate of return that we just talked about. And as your money's growing without the risk of the stock market, and you have guarantees that protect you from that, as it's growing and you begin to want to use your money for other opportunities, alternative investments, you can leverage it from the policy to go purchase those other investments. And the reason why in the life insurance space, proper life insurance, there's guarantees is because life insurance by itself is not an investment. If you go back in time, when life insurance companies were first created, it's all about protection from risk and protection from loss, right? So now that we understand that life insurance by state law and by contract gives you that guarantee in writing, you'll know that if the market goes up 10,000 points or down 10,000 points, your rate of return inside that policy is still going to be the same. For example, let's say that you've built up the cash value inside your life insurance, and what the cash value is the saving component of the life insurance policy. Remember, with life insurance is a death benefit, and of the 30 reasons why we love it, death benefits last. So now you have saved money up inside your policy, and you want to go buy a piece of real estate. Typically, real estate purchasers, the ones that are really good at it, get 4 different spins on each and every dollar. What they get is cash flow, which is rent minus mortgage. They get the property's going to appreciate in value over time, hopefully. They get to depreciate that property on their tax return. And last but not least, they get a mortgage interest write-off. That's if they just took money out of their savings account and put it as a down payment. Now, if you leverage the cash inside your policy, while it's still in your policy, the insurance company will loan you the money. You go buy that piece of property, you still pick up those 4 spins, but now you have the renter pay back your policy, and you pick up 3 other rates of returns. The rate of return that's guaranteed, the dividend that comes with the company, and last but not least, the interest that your renter's paying back on your loan. And that's how you get 7 different rates of return, Swiss Army knife, off of the same dollar by creating wealth and opportunity off of your cash value life insurance plan. So we talk about how is it tax-free, just so we're on the same page. And there's specific language that I'm going to give you that ties into these tax advantage strategies. Number one, whenever you fund a life insurance policy, the method of taxation is FIFO. For all you experts out there, that's first in, first out. So as you fund it for 5, 10, 20 years, and later on in life when you want to take income out of it, the first portion of the dollars that come out of the policy are what you put in. So that's up to basis. That means everything is tax-free. Now, if you want to maintain tax-free status, and check this with your accountant, once you break through basis, you then borrow from the policy. And when you borrow, that allows you to get the money tax-free. Up to basis, borrow from beyond. So just to address the other question, is life insurance an asset or is it an expense? Well, term insurance is definitely an expense. But in my opinion, based on overall proper planning, when you factor in alternative investments and you begin to fund a life insurance policy, you're moving money from one side of the table to the other. So cash value life insurance is 100% an asset. If you really understand how to create massive wealth with life insurance and understand how to finance your own debt, how to use your money, have your cake and eat it too, while it's earning a rate of return in the policy, and then use it to purchase other items, whether you want to finance your debt, whether you want to buy real estate or other alternative investments. If you have this as a principle, as part of an overall map and an investment philosophy, and for the long term, in the end, you will prevail. If you want to learn how to create massive wealth with these simple strategies, click the link below and I'll have one of the team members reach out and take you through our success process.